All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for, let's do August 9th, Monday, August 9th, our second week here in the month. We had a couple things run through our headlines today, or at least everything I heard while I was out on the boat listening to Sirius XM. What were the two things that ran our headlines in the financial world today? And I heard it on Bloomberg, I heard it on Fox, I heard it on CNBC. There were two things that, in my opinion, really ran the news. And I heard it over and over and over again. Yet I think those are the two things that are probably not necessarily important to our stock market. So what are your thoughts? There you go. Two of you typed in, and I agree with both of them. First one, let's go ahead and put it in there. Climate change and U.S. infrastructure package. So let's hit that one by one. See if I can spell correctly. Infrastructure. Come on. All right, so I'm going to play both sides of the story here. Climate change. What were some of the things you heard or needed to understand about climate change? Because I do think it's important, but I'm not sure. Well, but something was said that I threw it out the window today. There you go. Climate change. 6 inches of seashore water growth in the next 30 years. Basically, they're saying we're melting our polar ice caps, right? I also saw a 3%, 3 degree. That's not correct. It was a 3 degree temperature raise in the next 20 years. And it's funny, I think someone, so I'm just going to push this off. So the other two things, I'm seeing a bunch of different things coming all at once here. So I'm really scattered. I agree with you, Abraham. More droughts. And I saw this one, the world is on fire. So I understand that there could be climate change. I'm not sure I understand if it's carbon dioxide. But what really blew me to blow this whole thing off was the world was on fire and they used California for climate change, which, with all due respect, that comment on CNBC and their news guy that's actually on from 5 to 6 after Kramer, he's full of crap. The problem with California is they did absolutely zero logging, and they gave themselves a tinderbox of forests by not logging it and maintaining the area. I moved out of California because of how poorly that state is managed. And to blame global warming and use California for their fires as the reason, that's crap. That is so much crap. It's unbelievable. Because of that, though, I kind of don't want to get paranoid. I kind of feel this is someone else's agenda. Not saying that climate change isn't important, but the reasons behind it are not proven. Yet this ran all across our financials, not our financials, our stock market news today, and it came down to climate change and how there's some stocks like First Solar and so forth that should do better, right? We want to do climate change. Let's get First Solar moving. Let's see if these energy stocks will take off. Let's see if we'll see some movement in, and let's say, global friendly stocks. That said, the U.S. infrastructure package and the reality, the infrastructure, golly, package is about 20% of what Biden's, I'm going to say group, that's not correct, administration wants. So at least the Democrats and the Republicans are coming together to have a, I'm sorry, I see Bill Brander and Jim Kohler. I know, I get it. Yes, it's ridiculous. I agree. I absolutely agree. So here we go, though. Infrastructure package, only about 20%. Excuse me. Which, excuse me again. Which means there is more to come on a partisan agreement with the Democrats holding the tie-breaking vote. So you're going to see a lot pushed through next year as they make a push for their stuff to get through before we see elections come up for Senate and for House elections. But apparently 20% roughly of the infrastructure is coming through. What will that mean? Most likely, we will see some type of infrastructure. Golly, I just can't spell today. Not that I can ever spell, but infrastructure bill for many stocks in many different sectors. It was last week or the week before. I showed where a $660 billion bill where the money would head to. Definitely something we should look forward to. But more importantly, the stock market has so many risks, yet still is going up. So as I was doing some traveling, I had to be honest with you, I don't understand it. I don't understand it. And I started a lead that I got that, and I'm not even sure who it came from, but I started on a lead that I got, and it's pretty interesting because if you ask 20 experts what the most important sector is in the U.S. economy, what are some of the answers you think you're going to get? If you're looking at the sectors in the economy and you hear someone say, what's the most important one? It's interesting because there we go. We just got technology. And then second was financials, which I think are the two biggest ones. Although, when I do my research, we always hear about transportation, energy was always the biggest. And then right now, you look at real estate. And I mean, real estate employs 8.8 billion people, going up to 10.3. Technology does all kinds of stuff. I mean, the reality is there's so many biggest sectors that I'm not sure anyone knows. Because I could go technology, financials, transportation, energy, and real estate, and they're all probably about the same. Someone asked me to follow and do research on the energy crashes. And from my research on the energy crashes, most recently, energy crashes equal, in my opinion, corrections. And they overlap with other or secondary, I want to solve an issue or secondary reasons the market should go down. So last year, it was COVID, right? 2018, it was technology. It was also financials. The market is difficult. And I think the market is ridiculously difficult because of quick timing manipulation from many different areas. And I'm going to say areas slash sectors. Sectors. That's an interesting one. I'm going to mention that in a second, Bill. But here's where I'm going with things. COVID worse than it's ever been, and death rates are spiking. Hospitals are full again, and new variant, and I'm going to say this tongue in cheek, I really wish Maud was here. Dr. Gupta's there, though. So, Dr. Gupta, you're welcome to throw in your 2 cents as well. But new variant means old vaccines. And understand an old vaccine does not mean you're not going to get COVID. An old vaccine or any vaccine just means you're going to fight it better. So a vaccine, again, does not mean you won't get COVID, but it does mean that new variant means old vaccines won't fight the new variant and I'm going to put it this way, nearly as well as the old variant. And Dr. Gupta, don't hesitate to jump in anywhere that you would like to in regards to my comments. So here we go. Last thing in my research, going back to the energy crisis and crashes, the financials and so forth. The markets should not be heading up right now. We do not have. So I'm going to put it this way. I'm going to change this. I believe we have a. How am I going to say this? I'm going to say. I believe we have a government induced monetary crisis. And here's where I'm going with this. Too much free money in a COVID world with no place better than the US stock market to put your money into. And that's my understanding right now. We have a monetary crisis in the US where our debt's too high. We're not going to pay it off. We're risking the loss of our red flag is our I'm not thinking tonight. Our biggest red flag for us to worry about is our reserve rate, but that's not what I'm looking for. My reserve currency status, excuse me. Lost my train of thought there. My reserve currency status is our big red flag when we know the end is near. But right now we have so much money pumped in that people don't have to work and they can still make upwards to a $60,000 a year living. We have the government pumping more money into us with our child tax credits, which is really going to hit some people pretty big when they see their tax bill coming up and they don't get half of that child tax credit. I've got to believe we're going to see higher taxes on our capital gains, or just the Fed taxes coming up. May not go back up to where it was, but it'll be in between 21% for companies and the 35 on the high side. 26, 27, 28% would be a win. Money is flush. I heard hedge funds have a couple trillion sitting around. American public could have $1 trillion sitting around. $3 trillion in funds in general, money market funds that are coming due that have to be moved somewhere. We are in a cash rich environment. In a cash rich environment, this is going to scare some people, But in this cash-rich environment, we could see on the Dow, which again is a little bit somewhat ridiculous. But on the Dow, and this is the chart right down here, on the Dow, we could see 42,000 next year. And if you push it out a little bit farther, looking out 5 years, 65,000 is possible, which is just unbelievable. S&P 500. Currently looking at the S&P 500 right now. S&P 500 is sitting at 4432. By next year, that same 20%, 5,500, can't type, going 10 years and 5 more years down the road. So 5,500 next year and 5 years could be a 10,000 S&P 500. And the NASDAQ currently sitting at 14,860, which is absolutely ridiculous, right? NASDAQ could be $19,000 because it has a higher growth rate next year. And any idea where we could see the NASDAQ in 5 years? 45,000. And Maud says hamburgers at McDonald's will cost 50. Now remember, this is not the inflation. Our inflation right now, when you take out the energy and food, which is, the core inflation anyway, it's only sitting down at like 3.6%, and incomes are also raising 1.7. So inflation is doubling right now, wage growth almost, and I see it. But right now, we have a monetary crisis in our economy. The interesting part of a monetary crisis and I'm going to say this tongue in cheek, I don't know if it's the smartest thing to say, but a monetary crisis means we should expect the opposite of what normal market indicators are telling us. And the reason why? The money covers up the real problem. I have struggled this year. We've overprotected. There is so much going on. Thank you, Jim. There is so much going on that as I worked all kinds of numbers, I'm working money flows. When I say I'm working money flows are foreign investments into the U.S. stock market and U.S. economy by way of GDP investment. Those are the two common money flows. Just call me by way of GDP investment. Money flows are greatest right now internally. Free cash. And the sad part is we make socialistic economies look pathetic by the amount of money that we are pumping in and moving around to these places. It is absolutely unbelievable. I have struggled. And some people most recently have said, Kevin, you know, you have no protection on Baidu and Ford and Apple. What are you going to do with Apple? And you're starting to run some stocks without protection during these market little blips. And the answer is it hasn't helped us this year. This year, market protection, we have overpaid for market protection. So, because of that, we need to do a little adjusting. Doesn't mean I can't add protection on as quickly as possible, but I need to do some adjusting and I need to make sure that I'm understanding what's happening so I can do what's best for our growth of our economy, of our portfolios, which means I've got a lot to do. S&P hit another high next week, and it's funny because as you read through here, financial sector had a large percentage, then by utilities, technology, communication services, and healthcare. Only consumer staples edged down last week. As we look at our markets, they keep going higher. It's more of a sideways pattern, but we're just now starting to break out above the 35,100 level on the Dow. This S&P keeps marching higher. We just hit 1440 the other day. NASDAQ, boy, we broke the 14,200 level that was resistance, and we're now above the most recent highs at 14,825. Where will August end? I've been saying zero. I'm looking at this chart and I'm saying zero. But we're already almost up 1% in August. I'm going to hold on to zero for the time being. Earnings this week, Triple D, AMC today. AMC actually didn't lose as much as they thought they were going to. I guess that's not fair to say. AMC didn't lose as much as the market expected them to. So not only did they gain 3.36% or $1.10 today, after hours are up another 5.33%, up $1.80. Way to go, AMC. Wednesdays and eBay, but Thursday's our big day. Baidu reports before the market opens and Disney's after the market closes. IQ, that Baidu owns 30%, also reports on Thursday. So Thursday is going to be a busy day for me as I'm paying attention to earnings to see where things are going to end up. Economic report today was the JOLTS. Anyone know what the JOLTS is, by the way? What is the JOLTS? No one typing anything in. Level 1 stuff, right? What is the JOLTS? There we go. We got 2 answers coming in. JOLTS, no idea, and job related. It's job openings, right? There are 10,073,000 job openings available. It's shocking that we can't get jobs filled. And it's not high level, that's any level jobs right now are not being opened up. I've got a really interesting article. There are about 1 million more job openings than people looking for work. There are 8.6 million people considered out of work, and there are now 10,073,000 jobs. We're basically looking at 1.5 million. The first sentence, employers in the U.S. face an interesting challenge ahead, how to fill 10 million job openings with about 1 million fewer workers than there are positions available. It worries me. It worries me because we might have a generation that's too damn entitled. Well, I'm only going to work if there's a ping pong table and I can take half-hour breaks every 2 hours. Because signing bonuses, higher salaries, flexible working arrangements are not working right now. Maybe it's going to be parents don't baby their kids to the point where their kids have to keep borrowing money from them. Or where I'm going to head with that is that I agree with Abraham, I agree with William, and Randy, I agree with you too. We're going to see more automation in the economy. If we look at my Smith stores right now, you're checking out yourself. There's 2 people that are bagging, and there's 6 people helping people check out their own um, groceries and so forth. 8 cashiers and only 2 are working. Pretty soon, the 6 that are helping other people will probably go down to 2 because, in all reality, 3 of those 6 were chit chatting, not doing anything, and 2 of the 6 were just kind of milling around. I saw only one person at going and making sure people got help, was helping them bag, was helping them with the produce. If you want to see automation and some job not creation, see reverse job creation where jobs are getting taken away, welcome to grocery stores where you're now expected to bag your own groceries. The funny thing is, I wonder how much theft is going to go on in those areas. I wonder how much theft is people, oh, I thought I checked that out. I thought I scanned it, and there's nothing there that's going to happen. Another one. Others are shopping for their customers and delivering their stuff to their cars. Schools need to teach how to produce your own food, and houses will be able to get a job to pay for the needs. Yeah, it's hard. You need more land to produce your own food. But really, if I do my numbers now, we're at about 1.5 million more jobs than the JOLTS number showed us today. We have 1.5 million jobs. There are 8.7 million people out of work. And there's a job for them somewhere. It's shocking where this next generation seems to be taking work. And it's shocking that, at least it's shocking to me to see where we're seeing concessions being made and it's not really mattering. In fact, the problem is still getting worse. So yes, expect technology to do more. It'll phase out workers. Expect to do more of your own work or less service orientated jobs are going to be going by the wayside. Really interesting article that I hope you read. In fact, I'm going to start from the bottom up. They're about a million. We just found out about 1.5 million. Please read through this. Very interesting article. The world is nowhere near the end of this pandemic. It's not fair to say, and Maud and Dr. Gupta Babu, you're not allowed to bash me on this, but I am going to make the comment that it seems to me that masks did work, vaccines were somewhat working, and what's the group immunity doesn't necessarily work. Probably doesn't necessarily work because there are new variants that come in. So to say we're nowhere near the end of this epidemic is to say it lightly. COVID's probably going to be around for a lot longer than we think. For those people that thought, oh, we just got through it last year and we're done, not going to happen. We didn't do a particularly great job of getting through it last year. It's a worldwide problem or pandemic right now. It's not just the US. So rather unusual. I'm not a fan of Fauci, obviously. I do understand there are times when you have to go back and forth on certain things where you say one thing and it doesn't end up that way. A diagnosis is very difficult. A diagnosis when you have a rather new pandemic come your way. I understand it's very difficult. I'm definitely not a doctor, but I do understand the numbers. And I'm a little worried that herd mentality was not working to the degree that it should, that there are different strains that come through. And I want to get what Dr. Gupta said because he's exactly correct. And I tried to point this out, but you said it better than I did. Effective rate of vaccine still strong against the Delta in terms of preventing hospitalization. So thank you, Dr. Gupta. We do, again, I think it's in our best interest to wash our hands more, but boy, watch the September, October historical lows fall into place because this pandemic grips us and it takes over again. Kind of a bugger. All right, where am I going up here? Aha! Crypto. Nothing like finding out the US IRS seized 1.2 billion worth of cryptocurrency this fiscal year. Pay attention to what's happened to it. Pretty interesting. For those of you that are crypto guys, please read through this. It was very interesting. Thought I had 5. One article. Oh, and then your Social Security. But interesting number on Social Security here. And again, it's not looking good. Not looking good at all. Don't plan on Social Security being around to the extent that it is right now, 14, 15 years from now. With that said, what questions do you guys have that I can try to answer? And we do have a couple doctors, so if they're doctor related or COVID related questions, I may push those off to the doctors that are here. And again, Mon and Babu, don't beat me up. I'm just making some general comments on my disappointment in where COVID has gone in general. But I do understand it's something new. It's not like there's a one fix for everything, especially right out of the gates when you're diagnosing a pandemic, for crying out loud. Trying to give you guys time to write any questions in. Kevin, Where do you think Baidu is going to go this week? Well, again, it's been beaten down. If you go through Fibonacci's or if you go through Elliott waves, we should see about a 16.66% bump higher from here. My expectation is we're going to see Baidu on a good earnings try to get back up to that 218 to 220 mark. Bill Brander, do you think China's economic problems will affect the world markets? Definitely. They're the second largest economy in the world. So I think all their problems will have a direct effect on the world economy. But really, for the U.S., our problem or our biggest problem will be how to sell our product into other countries. Uh, we have the pandemic still wreaking havoc in Europe. It's we have problems coming up with even shipping our stuff right now in California. There are 20 big tankers there at the Long Beach port that I saw last week, and they're just more coming. We're not getting tankers through our own ports, let alone getting our own product through the ports in other worlds. So, most definitely, China's economic problems will affect the world, just like when the U.S. sneezed, the world used to, catch a cold. I believe China's in that same area right now. Have I ever used Ikimoku charting? I have not. I've not been impressed with it. There doesn't show enough accuracy in the Ikimoku charting that I've ever spent any time with it. And Ikimoku, where are you guys at? I think you find these in overlays. Ikimoku Cloud. For me, I just haven't. I haven't seen the use for them. I would probably use Bollinger Bands before I'd be using the Ikimoku Clouds, even in the full. So, haven't used them. Don't see a use for them. Have not been impressed by them. All right, what else do we have here? Could we be facing a sudden correction like it occurred in 2018 when the mortgage market fell apart? Great question. And Jim, the answer is yes. With bubbles again forming, anytime you have bubbles forming, we could definitely see a sudden fall or a sudden correction. So, are we facing that opportunity to have a sudden correction? Most definitely. It would not surprise me in September, October to see us lose the whole 18% and gain it back again through November, December, and January. With that said, the market this year has not been doing so. And again, if you follow money flows, we have a huge amount of money flow that occurred this year, and we have more on the way with the infrastructure package. So money can cover up that sudden correction. And ADP, strength and resistance purposes, I think you'll better find on pivot points. And if you're looking at Ikimoku, you'll probably find it better for Bollinger Bands. Okay, are there any other questions? If not, guys, I appreciate you. I stayed away from commenting on any position so I can get this uploaded immediately. And I don't see other questions coming in. So, guys, I appreciate your time today. Please don't hesitate to relook at my earlier comments. All weekend long, I spent trying to find out where's our market going, and I've always had to follow the money. The money is internal. Our money has been being created internally through the Fed. It's we're covering up our crisis with printing money. The big red flag when you hear talk again of losing our reserve currency status, because let's face it, we have more debt than we're going to pay off. That'll be the day that we're like, okay, uh, a Great Depression drop is on the future. Guys, I appreciate you being with me tonight. Thank you very much. I'll get this uploaded as quickly as I can here tonight. And with that said, have a great evening. Maud and Dr. Gupta, you're not allowed to bash me too hard, because obviously I'm a non-medical advisor making general comments on a pandemic that I've never had to deal with. Maud says, no worries. Thank you. Lots left. All right, guys. Hey, have a good evening. I look forward to seeing you for our next webinar. Bye-bye.